Some people that just want to be in the club, they just want to pay the entry fee. That's term. You're still going to get covered. You're still going to be in the building, but just with less perks.
Hey, what's going on, everyone? This is Reggie Winston with the Better Barber Podcast. Here we believe that together we can make barbers better, and by making barbers better, they'll make the community they serve better. I still got my player partner, Mr. Amazing Ant. He's over in the background today, because today we have a special guest. He's usually behind the scenes himself, making sure the podcast runs smooth. But he got some information that I think all of us could really, truly benefit from at some point of our life. We're all going to need it. And we have none other than today's guest, Mr. Brock Adams. He is our in-house insurance salesman and other financial programs and resources. So, Mr. Brock, introduce yourself, man.
How you guys doing? My name is Brock Adams. I've been the financial insurance field for a little over a year now, and just looking to be a resource to my community.
Nice. So, man, how long have you been in this insurance game?
So I've been in the insurance game for a year and a half, going on almost 2 years now. I kind of just, I started off really looking for something for myself, and just knowing that that life isn't, always granted, forever and ever. And I just wanted to have something in place for my daughter besides sneakers. All I had for her at the time was just shoes. Like, if I was to go today, she better learn how to sell these shoes. So I needed to, take a deeper look at myself and, be kind of mature about the situation I want to have established, going forward in life. That's what kind of led me down this journey here.
All right, that's what's up, man. I like that. Today, we're going to cover a few different things. How easy it is to get a quote, how affordable life insurance is, and we're going to talk about a few different products they have that might suit you best. Some people might not even know the quotes are free. You don't pay anything, you get a quote. What's the process like, man, for yourself to get a free quote from Brock? What should we do?
Yeah, absolutely. So besides setting the time to meet, pretty much how it looks is we discuss, like, what are your needs? I just kind of hear you out initially, like, what are your goals? How do you plan to leave a legacy to your family, or, to cover yourself if anything were to happen? And then at that point, we use what we call like a life insurance calculator. And what that does is it calculates your current income, how many years you have until retirement, what kind of final expenses would you have, whether that be like a burial or a cremation, because everybody's different. Whether you are owning a home or renting a home, because you don't want to leave your spouse or your family with bills that you would typically cover, as well as like the future of the finances of your family. So you, for example, if you were to bring in like $50,000 a year and something were to happen to you, how long would you want that $50,000 to be supplemented to your family? So for the next 2 years to the next 10 years, like, how long would you want to leave that? Well, what I like to say is like a final gift to your family. So we use all of that information and we kind of combine it together to create a plan. So some people might need more than others because they have, different amount of assets, or depend on their job, because I know you actually offer insurance to the people that come underneath you, but for the people that aren't here, based on your job, that can apply too. So let's just say your calculator says you need like 200,000 and your job already offers you 50. I'm not going to say you need that additional 50. We'll do the difference. So it'll be like 150 plus the 50 from your job. So we kind of take all these numbers together to create a complete formula.
Dope. Earlier, man, like when we started explaining it, you talked about some of the goals. Some of the goals I have written down here is like cover final expenses, which we all definitely need. Protect my income until retirement. Replace or supplement an existing policy like you just spoke of. Prevent others from inheriting my debts. I always think about the Temptation song, Papa was a Rolling Stone.
Yeah.
All he ever left us was alone. God, somebody. Not just by ourselves, but in debt too. Golly. Build long-term cash value and create a safety net for my loved ones. So I definitely think all those are appropriate goals to have. Combination. Some of them might just be one. I just want to make sure I'm covered when I die. I think too many times we experience that trauma, man, when someone we know pass away, don't have any life insurance, and now the family is reaching out to friends and family members. Yeah, and that sucks, man. Especially when you know the lifestyle that person might have been living. And it's like, bro, get your basics first. And I can't. Most of the people I know and have encountered and spent some time with, they know better. They just don't do better. If they didn't have no clue, they never heard of life insurance, they never seen death or whatever, then I can understand. But a lot of times, man, the people just don't want to do better, or they want to, but it's not a priority to do better. So you talked about a few other things like, debt ratio and what you make in a month now or a year and so on and so on. Can you get policies on your dependents as well?
Yes. So we actually recommend that you do. Because one thing a lot of people don't take into consideration is being insurable. So you can get quotes all day long, but what actually matters is your age and your health, right? So that's kind of how you get the quote in itself. But when you insure your dependents, they almost get like a free pass because they're so young. As long as they haven't had like, heart surgeries or anything major where they have to spend time in the hospital, then they give them like an automatic. So what that does is that makes them insurable at least until like the age of 18 to 25, just kind of depends on where you get insurance from. And then that way, as they get older, they're able to create their own policies without having to go through all the medical background, the criminal background, the driving background. It's kind of like they're already in the country club, or it's kind of like, I describe it like a job. If you have a job and you apply for another position, you go through a different process than the outsider who's applying for the first time. So it's like by insuring your kids, you're already kind of setting them up, giving them a head start in the future. So if they want to increase the amount that they have, then they don't have to go through that same rigorous process that you did.
Off the top of your mind, if you can remember, do you know about the average cost for a funeral?
Yes. So if you want a burial, on average, it's about $10,000.
Yeah.
For a cremation, it could range between like 3 to 7. Just depends on how fancy you get.
Yeah. That's what I want, bro. Burn me, baby.
Yeah?
Burn me. Don't waste no money on me, dog.
Look, I say I want half and half. I told them I wanted them to like cremate my foot and put it in like a little pyramid charm. So it's like, like how they bury the Egyptian mummies, and then they can just show my face at the funeral. Like, they don't need to see my foot on the bottom. That's gonna be gone.
Why this casket so short?
But I mean, I jokingly say that only because we began to prepare. If you don't prepare, you don't get options. So
that's what's up, man. Yeah, I told my wife, like, burn me, take all the money and take care of yourself and the family. Like, I'm not gonna see none of this stuff you go do for me. No,
right.
Just burn me, and please, y'all. If I pass away and y'all get to witness that. If my wife cremate me and have me standing up behind the barber chair, knock me over, please. Please knock me over. Man, I'll be so mad she put some clippers in my hand and some shades on me, bro. Oh, my gosh. But, yeah, man. I think people should definitely get covered at least for the burial expenses itself. Like, that's bare minimum. And then cover some other things for the family, like you said, when they're gone, and supplement the income that's going to be lost now. As far as the process, just call you, email you, text you. Like, how long does it take to go through all these questions that we got to answer? What's that process like?
So once you've decided on the amount that you want to pursue, there's an underwriting process. So what that looks like is I will come in, I'm filling out an application for you. I'm going to ask, your name, birth, age.
So the person not doing this by themselves?
No, they will not do this by themselves, with me at least. Now, granted, you can go online and fill out a few bit of information, and you'll have people call you and stuff like that. With me, it's a one-on-one sit down, and it's like everything is designated around you, and I'm here to provide that service. So once we've filled out, the initial information, there's going to be a list of medical questions. So it can work out two ways. You can either sit with me for a little bit longer, and I can ask you these in-depth questions, about surgeries, any allergies, anything you can think of that has to do with medical information, I'll ask. Or you can sit down with our nurse. And when you sit down with the nurse, you're going to do a blood examination, a urine examination, and they're going to get like your weight, and kind of like your mass, just to kind of see exactly how healthy you are. Because again, everything is based on your age, your health, and your gender. So it's better to have life insurance yesterday.
Yeah. The younger and the healthier you are, the cheaper it is.
The cheaper it is, and the faster the process. Because I'm sure the older you are, usually you get past age 55 and plus, it starts to become harder to think of people who don't take any medications or have nothing wrong.
All right.
Right? So the as soon as you start getting medications and things like that, the process is drawn out now, because now I have to wait for your doctor to tell me what's wrong with you, or that you're okay. But everybody knows doctors move slow. So the sooner the better. I always advocate for people when they get out of high school to get life insurance and to get a Roth. That's protecting you from keeping insurability, and that's already starting you to save, because most people wait to save when it's too late. So those two things I feel like every high school or 18-year-old should get in there.
Right, and it's so crazy because the sooner you start in saving, the less you need to put in, contribute each time.
Exact time is your friend.
Trying to catch up in your 30s and 40s, what you should have been doing since 18, is so rough, dog.
Crazy.
It's damn near impossible, dog. Earlier you talked about some of the medical things. These things are some of the things I found. These don't make you uninsurable, but these are points against the quality of insurance you can get. That's going to be asthma, depression, heart attack, stroke, cancer, diabetes, sleep apnea. Is that one I'm not counting, you think, that sticks out?
Anything, did you say cancer?
Yep.
Anything cancerous or having to do with the heart is a big red flag.
Gotcha.
Diabetes is huge, because not necessarily, like you said, not to say that you'll be declined, but it'll definitely raise your rate, and depending on if you're type 1 or type 2 and your age. Because if you're like type 1 and you're a little older, they're more than likely they'll probably decline you, or they're gonna charge you something crazy, and at that point you might need to go about another way of protecting your assets.
Yep. Another one I know they ask is, do you use tobacco products?
Yes.
Do they count vaping as tobacco?
They do, actually. It's qualified just as bad.
Okay.
Hookah, yeah. I mean, all depends on moderation as well.
Yeah.
Because I mean, if you've only went to the hookah lounge once out of the year, then that's not gonna fault you. Yeah. But if you in there every weekend, you got a vape every time that battery die, you go get a new vape, then you might need to just chill for a little bit before you apply.
What about alcohol? Is that something they ask?
Alcohol does play a part as well. Again, it's kind of like a moderation thing, because when you think about it from the insurance point of view, it is a business too. So what you're doing is you're assessing the risk, right? So if you're telling me you drink, and I mean like a beer or 3 a day, then your risk is going up. It's a risk of a DUI.
Times that by 3, right?
Right. So I'm taking chances on you. So I have to charge you by the chance that I'm taking, right? Because at the end of the day, let's say you do get approved for this policy, right? And then the next day you go out and you do something crazy, right? And that's the end of your time here on this planet, this earth. Then I have to pay out. So it's like, on the business aspect of it, I didn't even get any income out of you because you went out here and crashed out. So it's just like, if I have to take that risk, then I have to charge you more. So from the business point of view. So
DUIs and traffic points, do that get on count too?
Yeah, so DUIs, probation. So when I say they do like your medical, your criminal, your driving record, they do a deep search. It's almost like a federal background check. because I need to know how much of a risk you are to how
Not
much am I
looking
going
at
to cash
grades,
you out.
are they like school grades?
Yeah,
They looking at that.
I mean, not necessarily.
Oh man, that's why mine been
but-
so crazy high. Boy, them D's I carried all through high school.
But
My
it make you
God.
feel like it though.
Yeah, that's crazy,
sure.
man. I didn't see black male on this list of things, of challenges health wise, but that's just a joke, y'all. This is just a joke.
Yeah, but be careful health wise.
I know they, sometimes ask about your spouse and do you own a home? Do owning a home affect the probability of insurability? Or is it just how y'all can say, well, you might need more money or you need more coverage?
Right.
Okay. I didn't know if it was like a discount or was it something there that can help you be more insurable?
Nah, it doesn't necessarily make you more insurable.
Mm-hmm.
But it is a big factor to think about when you're coming up with your final plan, because it's just like if you have like a $500,000 home and let's say your policy is only $100,000 and you're the one that pays that mortgage,
Mm-hmm.
so you've now left $400,000 for somebody to have to figure out how to cover outside of grieving for you. Because what you got to think about too is if something were to happen to me and I have a spouse, she's not gonna be like, I gotta go to work tomorrow because the mortgage is gonna be due. So you want to be able to give your loved ones this comfort, or like I say, like a final gift in knowing that there's certain things that they don't have to worry about,
Mm-hmm.
or you didn't leave them with any additional burdens that now they got to figure out how they about to bury you and pay the bills. Yeah, and you don't want that type of scenario. So like the mortgage and the rent is more so just trying to figure out kind of where you stand. Now, I'm not saying that that's something that should be an initial worry, because more than anything, you want to make sure that, you can be put in the ground or cremated without having the cost, because they got to do something with your body immediately. And then, as you kind of progress or calculate how your life is going and the amount you're willing to spend, then you kind of start to factor in these other things. So I don't want anyone to feel pressured into, as we were kind of talking about earlier, getting like the biggest policy.
Mm-hmm.
Take care of what you can right now, because we are alive. So, I mean, I don't want you to put all your money towards that, but make sure that you have your bases covered. We call this like part of your financial foundation.
Absolutely.
You have to protect your assets, protect
Absolutely.
what you already have.
Absolutely. Man, I was just thinking about some stuff I became aware of. I know a guy who passed away. He had a lot of rental properties and he had a nice insurance policy. Left it to the family, his wife, of course. They sold just about all the properties and all the insurance money is almost gone. Like they turned assets into liabilities, like about cars and trips. And so it makes me think, man, like, yes, we're supposed to leave our family something, but we have to do a little bit more than leave them something. It seems like we got to teach them how money works, and what to do with the money once they get it. I know there's some things out there like trust and wills and things of that nature. We ain't got to talk about, that's a whole nother conversation. Right now, we just want to talk about life insurance. But I want to add that piece in there. We can't just leave them something and expect them to be good. We got to teach them how to use these tools and these resources. Let's talk about price of insurance. I know it's various different products we can go. Let's go with a term policy, 30 years. Let's do black male 30, 500,000. I want to make sure I can relate to my barbers. That's why I said 500,000. And I kind of know some of the challenges financially barbers have where it comes to proof of income, things of that nature. So can you give me something about your 30-year-old male, 500,000, 30-year term? What we're looking at a month on that?
For a 30-year-old male.
This is average too, guys. So if you're 30 years old, don't think this is your number. This is average, and this is one company, right?
This is
one company.
And this is based on like standard health. You could be a super athlete and it could be cheaper. You could face a few, health deficiencies and it could be more. So this is just like a ballpark quote. For a 30-year-old male, to be covered for 30 years, so this would cover you, and you would Just pay till 60.
Yep.
It would be $72.23. So a little less than $75 a month, or one Air Force a month.
One Air Force One a month.
Yeah, that's
barbers. 3 haircuts at $25 a month. Or if you're a customer and you pay $25 for a haircut, 3 haircuts a month will get you $500,000, or estimated to give you about $500,000 in life insurance. I think that's affordable. So we take that $500 down to $250. We're looking at about $40 a month, something like that. And honestly, a lot of people don't need $1 million policy with their income and what they have going on in life. Now, some people absolutely need it, but yeah.
I wanna say one more thing just to kind of put in perspective, because I know there's probably somebody at home right now saying, well, $72 times 12 months for 30 years, that's not $500,000. No, it's not. So this is why life insurance is important, because the money you're paying is not equivalent to what you're leaving behind.
Absolutely.
So after 30 years, you'll be 60. You'll have spent $26,000. So tell me somewhere else you can go and spend $26,000 and guarantee your family $500,000 that's tax-free.
Come on now.
So that is very important for people to understand, that you're only putting up a small amount of money for a very big picture. I would love for somebody to leave me $500,000. If you have $500,000 right now already somewhere, then we can have a different type of conversation. But for most of the day-to-day people that I encounter, we don't have that much money stashed aside.
Oh, no. We'll never be able to earn that in a couple of years.
Right.
Right? Or typically we won't.
On average. Right? Because if you can, then, like I said, we have a whole different conversation.
Right.
But
put me onto this, man. One of my barber friends, Jay Valentine, up in Pennsylvania, he had lost a few family members, and he realized, like, I didn't spend any time with my family. I was out here grinding, going to every show, trying to make all this money, but the policy I spend pennies on is going to have way more money than my bank account will if I was to die. He says, so what I do now is make sure I pay my life insurance. I work good enough and as much as I can, but I also spend much time with my family, my daughter, my wife, and I'm teaching my daughter what to do with this money when I'm gone, because I do not want to leave her this money. She get with some dude. She fueled his rap career. I was like, yeah, I feel you, bro. But that's a fact, man. So you said $26,000 can get you $500,000 in life insurance. That's crazy. That's a good way to look at that, man. And one thing we didn't mention, and I talked to you kind of off camera, I like to pay mine annually. You'll save a few dollars if you pay it annually, but I don't have to worry about paying my life insurance monthly and forgetting, or, you know what I'm saying? I just set it up annually, put it on the calendar, 30 days out. Hey, your next annual payment coming up, so I can already be prepared to spend that lump sum again to make sure I'm covered. And I
have the numbers right here. So if you were to do this same policy, if you were to pay annually, in your instance, you would pay $835, right? If you pay it monthly, that $72 I was referring to, you would pay $866 a year. So you do pay $30 more per year, but you have those smaller breakdowns. So to Reggie's point, you do save money by paying annually, but
it's not that big of a difference.
Yeah, and this big Reggie, he can do that.
No, it's just kind of being prepared. Just knowing that you got to make the expense and putting away, putting that money to the side where, hey, this is savings for investments and just retirement. Yeah, so cool. Before we get out of here, let's talk about the different life insurance products they have. We know it's a term. Term has 15, 20, 30. That's how long you'll be paying for and covered for.
Right.
After that, you don't get any money that you put in. Like, it's cheaper because it don't accumulate any value for you. And I know people say, well, man, I don't want to do that one because, if I live, who knows you're going to live that long? So I always recommend or encourage people to get a cheap term policy. Let's talk about the other whole life.
Yeah. So I just wanted to say one thing before we switch over. for the people who are saying like, I don't want to do that because then what happens after if I outlive it? I want you to sit back and think about how many people you know that died before the age of 60.
Mm-hmm.
Right?
Mm-hmm.
I just want to leave it at that. But for the whole life is great. For me, again, it depends on your situation. I kind of compare whole life and term life to renting and owning. So term life is like you rent an apartment, right? You have it until that term agreement ends, and then you either have to renew, you're homeless, or you're probably trying to get a house, right?
Mm-hmm.
So the house would be the equivalent to whole life, right? So whole life, you buy it, you pay on it for a certain amount of time, just like a mortgage, and then you own it for the rest of your life.
Mm-hmm.
So let's just say you paid on it for 10 years, then you have it till forever.
Mm-hmm.
Not only do you own it forever, and you no longer have to pay for it after you're done paying the mortgage, but you've also started to build up equity within that policy. So just like you own a home, over time you build up equity. The same thing happens within a whole life policy. The money is still tax-free, and you're also able to grab some of that. So when I say some of that, I mean the cash value.
Mm-hmm.
So you can withdraw some of the cash value as long as you don't take out all of it. It's
Mm-hmm.
up to like 90%, at least with my company. It's up to 90% you can take out so you don't deplete the policy. And at that point, there's no regulations on that. You want to get a new car, you go take the money out. You want to go on vacation, you take the money out. You want to get your girlfriend a new bag, you take the money out. We don't ask any questions. You just say, hey, Brock, cut me a check, right? So that's a great way to build up additional equity, but it does cost more, right? So in that aspect, I kind of say it's like the club, right? Yeah, the people who pay for the booth, they get the chairs, the server, the bottle, the hookah. That's your whole life. You get all the coverage, the death benefits, plus the cash value, right? And you no longer have to pay for it after it's paid off.
Mm-hmm.
And then you got some people that just want to be in the club. They just want to pay the entry fee. That's term. You're still going to get covered. You're still going to be in the building, but just with less perks.
Mm-hmm.
So that's kind of the way I explain the difference.
And when you borrow some money, you got to pay a fee. Excuse me. You got to pay a fee, correct? And interest when you return.
Yeah, so you do pay it back, but the difference is it's kind of like when you're paying the bank back when you get a loan, you're paying them extra money. They're making money off your money.
Mm-hmm.
But when you take a loan from yourself, from your policy, you're paying yourself back. So you're not doing anything but dumping more money back into your policy so that you can go back and take it again if you need to. You can rinse and repeat.
Yeah, and we're not taking loans off our life insurance policy for a bag or rims or a car unless we're making money from these things, right?
Yeah.
Only assets, only things that can absolutely make you money. Thank you so much, man. I know there's other policies. So I've heard like whole, universal. What's the difference between whole and universal for you?
So,
because this is confusing to me, and I have an insurance license, guys.
Right.
I have insurance license to sell, but I do not understand totally.
It's tricky too. So don't get me wrong. Like I would definitely dive into this a little bit further on a one-on-one basis. But the general understanding that I have is a universal policy is more based on like how the economy doing, if I understand correctly. So it wavers a little bit more than like a whole life would.
Mm-hmm.
So a whole life, as it's gaining like the interest and dividends, it's not based on the stock market.
Okay.
It's just like a 4% interest rate.
Yeah.
Right. Whereas universal kind of has more of a wave to it.
So it's tied to the stock market.
Mm-hmm.
That's understood. So the better the stock market doing, the better your returns are doing at that time.
Right.
All right. That makes sense. Okay. Cool, man. I know it's annuities and all these other things. We could talk about that another. Yeah. Yeah. We could talk about that. How can people reach out to you, man, and get some like just some information from you or get a quote from you? What's the best way to contact you?
You can contact me via Instagram. It'd be Big Wealth Bees. That's BigWealthBeez. Or you can just email me simply brock.a.adams@m as in mom, W as in watermelon, A as in America.org.
Brock, it's been a pleasure, man. Thank you for sharing this information, man. If y'all want to hear more, man, definitely reach out to the Better Barber Podcast. And if you know, we got to get that credit right, holla at my man, Amazing Ant. Trying to get that Bitcoin popping, holla at my man, Antoine King. You want to get this insurance right, holla at my man, Brock. And if you just want to give me money, please send me money to my Cash App. I appreciate you. This is the Better Barber Podcast. Matter of fact, and jump on the screen, let them know you still here, and because I know they concerned, man. You the fan favorite, man. You what they come here for. You the eye candy. Let them know you still here, champ.
Yes, sir.
He's still there. There you go. All right, now y'all. I hope y'all got your fix.